Hey everybody, this is Danelle. Today we're going to talk about all of the news of the week. We've had a lot of news over the past several days, including what is a recession? Have we actually gone into a recession now that we've now gotten the numbers for the gross domestic product, as well as how has this affected the stock market and the crypto market and NFTs as well. So let's go ahead and jump right in. As you see here on Investopedia, what is a recession? It is a significant, widespread, and prolonged downturn in economic activity. So we went over this a little bit earlier in one of our earlier videos because we were in the midst of a lot of noise regarding whether or not we were in a recession or getting ready to go into a recession. So a popular rule of thumb, as you see here, is that 2 consecutive quarters of decline in a country's gross domestic product will constitute a recession. So we just learned earlier today, this morning on Thursday, July 28th, that the gross domestic product number was in the negative. So we are technically in a recession. And what does that mean? A recession is a significant, pervasive, and persistent decline in the economic activity, basically meaning that we as a country are spending less, especially with regards to discretionary spending. We're only spending on things that are of need. So things that are a little bit more discretionary, we're probably tightening our belts with regards to how much money we are spending. And it's likely going to be prolonged for an extended period of time, particularly because of inflation as well. So the other large news that we had that came out yesterday was Federal Reserve has raised the interest rate another 0.75%. So they're doing this to fight inflation. So apparently, when you raise the interest rates, it's supposed to discourage companies and other businesses from spending as much money because they won't be able to borrow as much money due to the higher interest rates. But that, in conjunction with the fact that we're having inflation at the same time, this makes it more difficult because regardless, people aren't going to be trying to spend money, period, because prices are so high. So even though the companies, because they're not spending as much money and the market is a little bit less because there isn't as much demand, so prices effectively are supposed to go down, even though that may happen given the higher interest rates, people are still not spending anyway because with inflation now at the rates that they are, it's less likely that the prices are going to go back down to where they were before. They may go down a little bit, but they're not going to probably go down to where they are before. And we know that even though the number came out to be nearly 9%, over 8.6%, I believe, were the last numbers for inflation, we all know that it's actually much higher than that in certain categories of spending. So, as you can see here, also, recessions may last as little as a few months, while the economic recovery to the former peak can take years. Economists measure a recession's length from the prior expansion's peak to the downturn trough. So if we look at some of the headlines here, we'll see GDP fell 0.9% in the second quarter. So it has reached a second straight quarter in which there was decline, and it says here a strong recession signal. So this follows a 1.6 decline in the first quarter and was the worst than the Dow Jones estimate for a gain of 0.3%. The drop came from a broad swath of factors, including decreases in inventories, residential and non-residential investment, and government spending. So we do see that the gross domestic product has now gone down. It's in the negative. So we'll be interested to see what the effects will be moving into these next few months, as we know that we are not spending as much money and not as much income and revenue is coming in to the United States. As we can see here, the stock market has actually gone up in the past day after the Federal Reserve's announcement by the chairman, Jerome Powell, and part of that is because most people had already, as they say, priced in the rate hike. Most people had already been predicting that the rate hike would be at about 0.75%, and also it seemed as if that Jerome Powell mentioned that there's a likelihood that they could be seeing a decline in these rate hikes over time. So even though this last hike is at 0.75%, there's a possibility that we may be going down in the interest rate hikes going into the remainder of the year. They are off in August, so we won't know what the next number could be until sometime towards the end of September 2022. So there's a possibility that the market may do fairly well during this time frame as the Federal Reserve will be on hiatus. The NASDAQ, as you can see here, was up 1.08% today, and the S&P 500 also ended with an increase as well of over 1%. So as we look down here, you can see inflation has surged to a 40-year high. It hasn't been since 1980, which is unbelievable. The number was over 14% in the 1980s, and it is now over 8% at 9% in 2020. So this has been it's been a long time since we had inflation at these numbers, and it's been reflected obviously in what we've seen in what we are now calling a bear market in the stock market as well as the cryptocurrency markets. Now, going to cryptocurrency, many people have been saying that Bitcoin and some of the other cryptocurrencies are an inflation hedge, and we haven't quite seen that yet because for the most part Bitcoin and Ethereum and some of the other major cryptocurrencies have actually been moving alongside the stock market. So as soon as the stock market started falling back precipitously, Bitcoin and Ethereum started doing the same thing. So we still haven't seen a breakaway from the entire equities market, but we have seen over the past 14 days or so, Bitcoin Ethereum has been going on a positive run. As you can see here, Bitcoin is now over 23,000 and Ethereum has been going on a nice run and it is now up to $1,700 per coin. So we'll be curious to see how much longer this rise will be. This could potentially just be what they call a bull trap, where it may seem as if the market is going up and will be going up for a little while. So you'll start to see more buyers start to come in. And then next thing you know, the sellers are selling and the prices could go right back down to where they were, if not further down. So we'll be interested to see what happens over these next few weeks. We'll go into the NFT market quite really quickly. We see that OpenSea, which is the largest NFT marketplace, looking at their analytics here with regards to Ethereum NFTs. As you can see, we're way off of the high of January 2022, and we're approximately at 475 million nearing the end of July in sales, monthly volume. And if we look at daily volume, it's been staying pretty steady over the past month and a half. And it'll be interesting to see if we stay at these steady levels or if we find any increases over the next month or so, if and when the crypto and stock markets begin to also hopefully increase over some time. But it still remains to be seen, so we shall see. As you can see, the volume has down for sales, so that inevitably would mean that there would be less NFTs total that are sold, even though this number is actually not too bad here at approximately 1.5 million NFTs have been sold. And we also can see the monthly fees incoming for OpenSea has dropped down a lot over the past several months, but obviously that goes with the low volume that we've had as well. So we'll do a quick look of the overall NFT market over the last 24 hours. Yuga Labs is still bringing in money every single day. They had over 3.2 million in sales just from the Mutant Ape and Bored Ape Yacht Club NFTs. Other Deed near a million at 871,000 over the last 24 hours. CryptoPunks also doing very well at over 600,000. In an NBA Top Shot, still bringing in a nice chunk of money at over $376,000, doing over 15,000 transactions. So NBA Top Shot is still doing quite well, which are the virtual digital NBA collectible cards. So it will be interesting to see what happens over the next several weeks. We'll obviously keep you posted. It's important to understand the macroeconomic environment as we make our investment decisions. It's very important that you do your due diligence and try to understand the entire market, not only from cryptocurrencies to NFTs, but also in equities and what's going on globally as well. Because globally, there's also high inflation, there's also recession happening around the world. So this can be affected not only in the country of the United States, but in other countries as well. So we need to know these things so we can make informed investing decisions. So we look forward to connecting with you soon. Please, you're more than welcome to join the Networkchain. We look forward to linking up with you soon. In the meantime, take care. Bye bye.